Good Friday afternoon, everybody. I'm Jeff Hirsch, editor-in-chief of the Stock Traders Almanac, and this is Wealthwise on Biz Talk Today TV. Today's featured guest is the illustrious financial analyst, reporter, columnist, and OG blogger, Herb Greenberg. I'll bring Herb on in just a few moments. First, here's what's on my radar. April 3rd, my best 6 months seasonal MACD sell signal was triggered for the Dow and the S&P. Many of my stock and ETF positions were already stopped out. We ended up closing out the bulk of the sector ETF portfolio except for staples and utilities. We implemented stops on the Qs and the IWMs, which were subsequently stopped out, and we added a basket of bond ETFs. Last week's new ETF trade ideas are doing quite well. We went back into the QQQ and the IWM. We added positions to the SHV and the SGOV. Those are the short-term bond ETFs. We had some hedges we added against the dollar, the declining dollar, the euro, the yen, the Swiss franc, and the ag ETFs, the FXE, the FXY, the FXF, and DBA. And we also added to those staples and utilities positions the XLP and XLU. But, and I will pull up my chart today, if I can get the share screen thing working right here correctly. There we go. The bounce off the tariff tumble is gathering some momentum, and it really sets up well with this seasonal pattern of my post-election year patterns that kind of run through at least somewhere in the early June to early August period, this sort of stronger, Q2 into early Q3 period for these post-election years. But, the VIX we had above 60, right around 60, came down under 30. I think it just closed below 25 today, which is encouraging. So that retreat in the VIX is also supportive. But this waterfall decline that that we had starting back here in February and really took off, when the tariff announcement happened back in early April. It did some serious technical damage. We had, as you can see, numerous support levels failed. We have death crosses here in the S&P also, as well as the Dow and NASDAQ and Russell 2000 charts. But currently, we've got some technicals flashing green. A lot of people are talking about one in particular, the Zweig breath thrust. We knew Marty back in the day. He was a contributor to the Almanac, a collaborator with Yale and myself. Great guy. But everyone's, claiming that there's this perfect bottom calling record for the Zweig breath thrust. It's based upon an extreme level of new advancing issues being very low and then flipping to being very high. But this type of perfect record is something, here in the Almanac office, we think those types of perfect records are primed to be broken. So we're looking for this thrust and verify situation. Today we closed above this 5,500 level, and this is right where that sort of failed W123 swing bottom that I was talking about the past few weeks. So it's also right with this trend line off of the April and 24 and August 24 lows. So we got to get back through that. We're a little bit above it today. We're going to need to put that in the, we're going to need to overcome that more substantially. And then above this 5,500 level is the descending pink line here, 50-day moving average. And of course, the election gap that I've been highlighting for a while, which runs right across the top of that W123. So the mantra here is thrust and verify. So, we're not out of the woods yet. We're comfortable sticking with the worst 6 months strategy until we get more clarity from the geopolitical and economic arenas. On April 3rd, when we had our sell signal, my 2025 annual forecast shifted to 50-50 base case, worst case. Base case is about 8 to 12% gains for the year. And the worst case, which you can see the previous post-election year chart tracking some worst case scenarios is for a flat to negative year across the board. So sit tight, wait for the fatter pitch and more bullish indications. And with that, I will bring on board my old friend, Herb Greenberg. Herb is the editor of Herb Greenberg on the Street and Herb's Red Flag Alerts, all at herbgreenberg.com. Very simple, kind of like stocktradersalmanac.com. We like that. Herb was one of the first mainstream journalists to shift online in '98 as a senior columnist for thestreet.com. I think that was probably when we first met around that time. And I think that was when Kramer was still running the show. That's when he started it back there, right? Yeah.
Yeah, he started a little earlier, but yes, Jim convinced me to come aboard.
Good guy. I enjoy Jim. Not the same guy you see on TV either when you meet him in person. He's a real mensch.
No, totally different person, highly generous, very sensitive, very empathetic.
Always stops to talk to me. So before then, though, you had a hell of a run at a lot of places: MarketWatch, CNBC, the Journal, Wall Street Journal, the San Francisco Chronicle, the Trib, Cranes. I mean, quite a CV. You also founded a couple of short bias research firms, which I guess sort of leads to now you being focused on throwing red flags or flying red flags in the market. So, as I say, quite a journey. Welcome. Where did it all start?
Oh man! By the way, I'm just back on Thrust but Verify. That was a good one.
My partner Chris, he took him a couple of reads. I had it in a subhead in the newsletter yesterday.
No, that's a good one. That's a keeper.
Thank you.
Even though somewhere in here we should talk about charts, because I look at you with your charts and it's so contra to what I do. Even though I respect the technicians, because I think many more people do technical analysis or use it as part of their overall strategies, just for entrances, for exits, and for sure. Some people who are traders to do the entire investment strategy, even if they don't know what the company does. But so you have it running the gamut. And what I'm fascinated by, and we can talk about in a sec when we get to that point, is just how you all do it so differently. And you all probably, if I got you in a room, I'm assuming many of you could find a different approach or a different interpretation of the very same charts.
I mean, I'm not a pure technician. We look at fundamentals. I mean, JC, who we both know, he and I have this ongoing thing that seasonality is a form of technical analysis because it's price over time. But we look at monetary policy, sentiment. My bias is or foundation is seasonality, which the first chart was all about that. But you started where? Back in Miami?
I am a native of Miami from back in the old days, and couldn't wait to get out of there when I finally could. When I was after college and even after my first job, because I just you back in those days you were stuck in the bottom of that god awful humid place, and you wanted to get.
It's great in January and February.
It's fantastic about 5 months out of the year, and you can't beat it. Certainly back then when the weather is like, I'm in San Diego right now,
right,
and the weather's a lot different than it used to be.
San Diego is laboratory conditions, man. That's perfect.
Well, yeah, you look out my window today and you told me about laboratory conditions. So the reality, though, is, look, I got into this entire reporting gig, financial journalism gig through the back door. It's not something I ever wanted to do. I like to joke that a lot of people have a misunderstanding when they talk to me. They think I manage money and do all. Stop. I was a journalist. I didn't even know that I wanted to be a journalist. It wasn't my goal in life was even to be a journalist, let alone a financial journalist. We're talking about the early 1970s. We're talking about a very rebellious time. We're talking about a period when my way of thinking was very different than, say, it is now, just because I was a naive kid back then. And I tended to tilt against the conventional world. So I went to work. So the reality is, the story I like to tell is I wanted to be a disc jockey. Growing up in Miami, the radio stations there were always just the way
man after my own heart.
Yeah, I really loved it. You listen to the stations. I did the call-ins. I'd call in. I'd play the games. I'd
Did
do
you
all
ever
that stuff.
spin any
I was into
records?
No, 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 no. I only at home when I created my own little radio station and did that kind of thing, wiring it up and, broadcasting to myself. But I had these dreams and they were unrealistic, most likely. So I went to, when I went to college, the first place I went was Miami-Dade Community College. I had wanted to go to the University of Florida, but my family was such. My brother went to Miami-Dade first before he transferred to the University of Miami. And, I went to Miami-Dade. It worked for our family. I lived in a little town called West Miami, which is just next to Coral Gables, and borders on Miami Trail, Southwest 8th Street on one side, and Coral Gables on another side, and unincorporated Dade County, or what it was back then, on the other side. It's actually where Marco Rubio is from these days, or where he lives or lived, for better or for worse. So I ended up, going to school, and you don't know what you're doing your first year, and you're just hanging out, and then they say you have to get on a career path. So I go to the career office. They say, "What do you want to be?" I say, "I want to be a disc jockey." They say, "Well, you got to take some classes," but there are no such classes for that. The only thing that appears to be the right thing to do is to go into take the journalism course. So I said, okay. So I took the journalism course and was extraordinarily lucky to, as people will say, there's one teacher and there's
Yeah.
one person. And I had there was a woman at Miami-Dade back in those days. It was called Miami-Dade. I think now it's called Miami Community College. But there was a woman who had been the dean of journalism teachers for all many Miami journalists back then. She knew them all, and she taught them, many of them, at Miami High School. We're going way, way back. And she took me under her wing. She liked what I did. She, for some reason, saw something in me. And we're talking. I remember my first stories, first things I wrote, what it was like to be published the first time. And she just encouraged me and encouraged me to keep moving forward. And for some reason, it's like anything you do. It's one of those things, you start doing it, and it just sucks you in.
Yes.
In that case, it was just got it just spoke to me. So I just continued to move along. I went to work, one semester toward the end of my reign there. I went to Miami News, worked as a copy boy early in the morning, went to
Hmm.
school at night. She
When
she
was
hooked me
this?
up on that job. That was in 1971, 1972. In fact, I worked as a copy boy. I worked they actually had me come back after I quit. I worked the Republican and Democratic national conventions.
Cool.
One of my jobs was to drive the yellow Ford Pinto with Miami News on the side, looking for people who were being tear gassed, and get myself right in the middle of that when I was out there doing it. But I did everything. I went and I hauled the mail. I did everything early in the morning. I got coffee, did all that kind of stuff. But then she encouraged me to apply to the Miami Herald had a scholarship to the Miami News. I mean, to the University of Miami, and they gave one out once a year. She encouraged me to apply. I was very competitive. I got it, and I went to where I did not want to go, which was the University of Miami, because it was close to home. I wanted to go to the University of Florida, but this said you're going to go to the University of Miami. Long story short, it was, I met a lot of great people who've gone on to do wonderful things. And I went through my 2 years there. I interned at the Miami Herald, got out of school, didn't know quite what I wanted to do. And Knight Ridder, which was the newspaper chain, mentioned there was a job up in Boca Raton where they had a small newspaper, the Boca Raton News, which existed back then. And I went in there. It was one of those Saturday, Sunday, sections they did.
What
And
was
I
your beat?
used my beat was not back in those days. Everyone wanted to be Woodward and Bernstein.
That's
Everybody
good.
wanted to, cover the city government. I was bored with that, and nobody wanted to do the weekly business story. So when it came to me, my first week or two there, which went in the Saturday Sunday paper, I went and did it. I remember the story to this day, and for some reason, I just started raising my hand every week. Boca Raton was a wonderful
What was
place
that
back
story?
then. That was a story about I interviewed the manager of the local Publix grocery store, and but it was a great story because he explained how he started as a bag boy and he worked his way up, and Publix had profit sharing, and how he basically was able to work that job and become the manager of the store, which actually earned good money in those days. And I remember it was like, if you remember to put your eggs at the top of the bag, you can move on and move up in the chain.
I started
So
at the in the mailroom also at the Almanac
Did
with
you?
my yeah, of
Did you with your dad? Well, you're there.
course.
You're working. We all work in the mailroom, so that's
Answer
where
the
you learn how.
phones.
You do everything. You have to, because that's how you get into things and you find out what you don't know. And I knew I didn't want to be a business journalist, but when it came, because of the business desk was it was the
But
boring
you're still
desk in the
doing it.
back of the room. I'm still doing it and I'm loving it because I was able to basically ride the curve of financial journalism as it sort of grew out from
Yeah,
behind the sports pages to actually become something really significant. And going to doing it in San Francisco, I mean, in St. Paul, Minnesota, and in
hmm,
Minneapolis, in those days when you had
that's
multiple
right.
railroads, multiple airlines. So you're learning by doing. I'm covering Burlington Northern, which was a public company in those days, and talking to Louis Mank, who's the CEO, and Norm Lawrenson, who was the president. And they'd have me in there. I didn't know what I was doing. And I just, and I just sort of eased my way into it and then got recruited by Cranes. And Crane Chicago Business was an amazingly aggressive publication in those days. Went there, it was my boot camp of my career, went to the Chicago Tribune and just moved on. Point is I rode that wave of financial journalism and literally learned, like many of us do, through by doing, by learning, by researching, as opposed to being schooled in, say, business or having an MBA. You don't need that to do what I
Yeah,
did. You need to know how to ask questions. And that I can
very
do
important.
plenty of. Yes.
Um, that's one of the things we try to tell the kids these days. Like, just, there's a clip from the Stallone Tulsa King show where he's talking to the guy in the car about going to school. It's like, it's not about nobody. It doesn't matter what you major in. They just people need to see that you can spend 4 years completing a series of tasks reasonably well, so that when you come work for them, you're not going to ruin their business, and show up on time and that kind of stuff. And then you go out there and you learn. I mean, I learned everything about this business from Yale and from doing it. I mean, I used to run numbers with this little ruler I still keep here for posterity out of the Barron's lab pages. This little sucker I used to go down and underline numbers in red pen and then add them up in an adding machine. I mean, I've told that story a million times, but yeah, you got to be a constant student and
Yeah, you
learning,
do.
asking questions.
Well,
So
that's the key to it. You always ask questions. The one thing I learned throughout all this, and it's very important, I think, takeaway in my career is that never assume everybody knows everything, and don't feel like you're stupid for asking the question about what that acronym. What's a SPAC? When I first heard
I ask that
SPAC,
all the time.
I didn't know. What I learned, especially with the Q&A column I did at the San Francisco Chronicle that we did, it was a mailbag column I did once a week, so that way I could do 6 columns a week. And what I learned from that was you start seeing the questions that are coming in and who they're coming from. And a lot of people are almost embarrassed what they don't know. And in the
Yeah,
world, especially we live in now,
most people are.
overnight, but overnight with social media, there's terminology, there are financial strategies, there are things people that are really on the inside of that strategy
Right,
talk about like it's commonplace to everybody,
right.
but it's really not. And that's their edge for the moment, just for the moment. But nobody can be expected to know it all. So you learn and then you try to figure it out. And the beauty of this is like an analyst or even a hedge fund manager. I was going back and forth with one of my pals who runs a hedge fund, and you become an instant expert in a lot of things and you become mini experts very quickly. It's a skill you learn. And no, you don't know
Yeah.
all the
Same
nuances or
thing
all
with,
the details,
you
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 know.
you you analyze a company, which we both have done over the years. I do it differently now, but in the early days, the first thing Yale taught me was the price to sales ratio. And I would go down, fully diluted shares outstanding, and get their market cap so we could see what their valuations are. Call up these companies, just start asking questions about their technology, their new drug, their clinical trials, or whatever it is, and you become a mini expert pretty quickly just by being,
Yeah.
inquisitive, writing things down, and you know, keep asking. No such thing as a dumb question.
No,
Um,
there isn't.
so there you were in 1998. Where were you in 98 when you got the call from Jeff?
98, I was at the San Francisco Chronicle. I had been their main business columnist for 10 years. I actually left almost 10 years to the day. It was I guess it was the best job I ever had. It was most fun because it was high profile. And
Right.
I was doing that. And then about 5 years into the job, I started also becoming the morning business reporter for KRON TV, which was NBC affiliate there, which at the time was owned by the Chronicle's ownership family,
Right.
the family that owned the Chronicle. And so I was doing multiple jobs. I also had a column in Fortune magazine at the same time, a monthly column. I also had some weekly stuff. I was doing a tremendous amount. So I'll never forget, I was at the TV station one morning and Jim wrote me, or he pinged me one way or the other. I don't know how we communicated in those days. I think email was there. And he said he was interested in starting this thing, this new street.com thing. I'll never forget my first question to him was, how can you do that when you're running a hedge fund? He said, oh, first thing we did was we went to the Securities Exchange Commission to run this through them to find out what we need to do. And I always remember when he came to me, because I was considering a job at the time. The Wall Street Journal was considering hiring me in a joint deal with CNBC. It was a sort of something that never went anywhere, but they were talking about it. And Jim was talking to me. And what was interesting is that when I thought about doing this, remember what the street was in those days was online journalism.
Mm-hmm.
It was not, I had this job. You have to understand, I had this really good job. It was a wonderful job. San Francisco was a fantastic place to be in those days. Doing what I did was kind of, as a critical journalist in just right at the center of growth stocks in those days, the .coms and everything else. And when he came and offered me this, and I remember I visited him in New York. He takes out his checkbook. Okay, just give me a number. How much will it be? And I remember, and I lived in San Francisco. I really, had to move to the East Coast, which ironically I shouldn't have had to do because of the .com. I had to move my family. It was a really hard move. But I remember thinking, if this is successful, I will kick myself a million times over. And I don't mind taking risks with my career because I've taken plenty. And I remember just thinking, I got to do this. And a lot of people thought I was making the stupidest mistake you could ever make, going to this online newspaper or online publication. And it was just, timing couldn't have been better. The newsroom was fantastic. Dave Kansas was the editor. He had been at the Wall Street Journal.
Forgot about Dave Kansas.
Yeah, Dave's around.
Yeah.
Yeah. I talked to Dave a while back. And so, those were the wonderful days. That newsroom at that point in time was without question one of the gutsiest, most aggressive, no holds barred places ever. And I will tell you something. And what it was is Dave will tell you, he hired all these people who got fired from other places or couldn't hold a job down in other places because that's the personality. You needed the insubordination kind of personality. And that's what made that newsroom so great. And those people have all gone on to do some spectacular things. It was, just a wonderful point in time. And so that went on to actually set the stage for what journalism was going to be, what financial journalism would end up becoming. And importantly enough, the columnist conversation, which the street.com still has today in its real money section, the columnist conversation will always be known, especially will always be known as the originator of social media. It was Twitter before there was Twitter. And I know that the folks who've invested in the company have said so since, and I think it's.
I still get their stuff. I mean, I'm some of the guys there, like Doug Cass and Helene Meisler.
Helene, those two. Oh my God, those two are fantastic. I keep in touch with both of them. I get in touch with Helene more than Doug, but
I've played golf with Doug. He's hosted me at his place down in Palm Beach. Yeah.
So that's
a couple of great technicians, by the way.
Yeah. And by the way, I was just looking it up because I had a quick blank here, and that was Fred Wilson, who was at Flatiron Partners. He was the venture backer of the street.com today. And he's the guy who would tell you right now, because he was an early investor in Twitter. He'd say, yeah, street.com was the beginning of that. The columnist conversation was. So
was that Yahoo Finance was already out by then, right?
Yeah, Yahoo Finance was out. The message boards were already up and running. AOL was up. I had a site on AOL while I was at the Chronicle when they were paying you for content. It was called the Biz Insider site. I was the original Business Insider. My column was called the Business Insider. And then Henry comes along and he takes the thing and he does wonders with it. So
I still have Jeff Hirsch at yahoo.com.
Well, I don't have Yahoo's. Well, I have a Yahoo account, obviously, for my finance. But what I have is I do have my AOL account, Biz Insider at AOL.com, which is where all my spam goes, which is where nothing. I can't use it anymore. It's embarrassing.
So
It's oddly embarrassing, but
so
because it ages me.
you're still Herb on the street, thanks to Jim Cramer and the whole. I mean, you still keep that. It's a great moniker. Um, it rhymes. You know, it.
Do you know that Do you know that the Wall Street Journal in those days wanted to? They actually threatened to sue us
I of course.
over the because it was heard on the street, and we said you can't sue us because my name's Herb and I'm at the street. And subsequently, my column appeared. You know, I went to work for Market Watch, and my column would appear in the Wall Street
Right.
Journal
Yeah.
on weekends. But you know, and it's a good relationship I had with them. But you know, today the big question about Herb on the street is, and I debate this because I'm going through a bit of a rebranding, and I debate it because Herb on the street, some people think is a weed shop. So it's sort
Yeah.
of like, well, what do you know, I,
Hey,
you know, when
go
I
with it,
talk,
man.
well, you got to go those kids today, when anyone younger than
That's
say
great.
40
Herb on
gets
the
my
street.
name, I'm at a restaurant, I'm somebody say, what's your name? I say
Dude,
Herb, and they'll go,
you should start a
Herb.
dispensary.
Well, I could. I have been, but I can't get Herb on the street because I think some weed dispensary has it already.
It's better off. It's not, everyone's smoking too much. It's not good for you anymore. Um, so you're focused on flying red flags now. I mean, you always like to call, um, you know, BS out on the markets and stocks. Why are you focused on that now?
You know, it's very interesting. When I made a transition from my short bias research firm back in 2021, had some significant heart surgery, had a new valve and an aorta, part of my aorta replaced. And we were going into COVID. I came home into COVID. Had it done in Cleveland, which is a fantastic place.
Rough
And
time.
I got back, and it was not a fun time. And our business, as I perceived it, was not doing as well as I would have liked it to done. And I'm an impatient person, and I don't mind trying things. So I made some changes. I first went and tried to do an activist short thing, which was an absolute disaster. And 3 months, I got away from that. It was the wrong thing for me, but I had to do it because, again, it's like the street.com. You got to try it because if it works, you would have kicked yourself. What do you have to lose? You have to lose is that you lose, and then you move on. And then I went to MarketWise, which is the former Stansberry, and I was part of for 2 years there. I had two long only newsletters. This was new for me, just doing long only. Not that I haven't written about a lot of longs in my career,
Right.
especially when interviewing money managers, which was a big part of my earlier career. But I actually enjoyed this respite at this point in time and finding really good ideas and putting that skill to work, working with some others, but putting that skill to work.
Hmm.
And it was rewarding, and those portfolios did generally pretty well. But it wasn't the right thing for me.
This was
That business.
this was after COVID.
This was after COVID. I went to Empire Financial Research, which Whitney Tilson had started, and
Sure.
I was there. And then that whole thing folded. And so, meanwhile, I was on. I didn't. That was not a type of a business. There were wonderful people there, but the promotional aspect of that business did not sit as well with me. I had trouble with that, and they knew it, and I knew it. They knew it before I knew it before I walked in the door.
Too
But I enjoyed
salesy.
the longs. Too salesy at the end. Everything had look, and that gets to what I'm doing now. Everything has to be marketed. They're the originators in knowing how to really market this stuff. It's the question is the way they market seen a better point in time. They market a different way than I like. I can't promote things the way they promote them. There are other ways to do that, and I think I've tried different things. So I started a Substack while I was working there because I would do every few times a week I would be writing. So I started something on Substack. I said Substack, a newsletter using the platform that is known as Substack. And I hadn't written like this in a long time, and I realized I still had my voice. And I was enjoying it. I was having fun, and and it was free. I was writing free stuff,
And
so
what were you
people
doing
could read
there?
it. Where at Substack
The
or
Substack. What were you
the
writing there?
Substack was literally what I was writing for. They called it the Empire Daily. What I was writing for the Stansberry, well, the MarketWise. I also put over first on LinkedIn, And
Right.
then after LinkedIn realized, I thought maybe I should try putting it over on Substack. And I was amazed by the amount of interaction I had. It was so different than LinkedIn, and I got a lot of interaction. And it was, and I have a lot of followers. I mean, I have hundreds of thousands of followers on LinkedIn. A lot on social
Yep.
media, but social media doesn't matter. So I went and I just did it just to have a bigger outlet. And then I realized that I had some really good stuff there that shouldn't be given away. So once I left MarketWise, my decision was to go and start to charge for this, start charging for the
Yep.
work I was putting on Substack. But then another business opportunity came along that to me didn't work. Let's just say, I'll be kind and say it didn't work. So for 8 months, I was involved in something that just wasn't right for me. And so I then started to charge on Substack. And as I started to charge, one of the first things I did, the way to charge, I had to have value. What's my value? So I created something I called Herb's Red Flag Alert. I called it the Red Flag Alerts. Herb Greenberg on the street, then I had the Red Flag Alerts because I firmly believe I thought, what's my true DNA? Who am I really? What do I really
Yep.
enjoy doing? I
Right.
enjoy flying the red flags. It's just kind of hits
Well,
my
what does that mean?
personality.
What does that mean,
All
flying
right,
the red
flying
flag?
the red flag. Flying the red flags is trying to, the way I looked at it was this. This is for investors, not traders. There are thousands of stocks you can own. If there are thousands of stocks you can own, why buy these? Because these are likely to lag the market. Now, the concept started by me using exclusively some quant data, quant screens from my friends at another firm called Kailash Concepts. These are wonderful individuals who
Is
have
this comes out of the short based biased research you were doing way back? No.
no. The short bias research is separate. These are guys that just have a quant. They do quant, long short quant. They rank things in
Right.
quintiles. They haven't. So I would go to the bottom of their quintiles, and I'd through my own little machinations would figure out which ones seemed interesting. And I started my red flag alerts by just using data from that and having some names, and they ended up doing really well. Meaning they lagged the market or they blew up.
Right.
So
So
yeah.
is that still the process? I mean,
Well, now it's part of the process. Then as I started to evolve it, my old network came back. People started talking to me. I started getting ideas from other people because that's what I used to do as a journalist. I'm no longer a journalist, but I have friends in the business. We talk about ideas. It's fun to
you're a
collaborate
newsletter
with
editor
people.
now? You're not a journalist?
I don't consider myself a financial journalist because when I was a financial journalist, I was literally working for a mainstream news organization. That's the way I viewed it. Now I'm just a guy who writes about stuff. And you can call it whatever you want to call it. My LinkedIn says former financial journalist. I enjoy collaborating with some of my sources. I wouldn't do that as a financial journalist. I enjoy trying to get the best work out possible because it's really important to me. So sometimes what I learned with my short bias firm, where we were three people, three heads were better than one.
Mm-hmm.
And sometimes it's the twist of a phrase that can make something better and more meaningful and add more value. So what I did is I started broadening it out, and I used the quant stuff still as a backstop, and I started having other tools I use as well that I'm looking for. So what I found was I said, look, here's the deal. I know that a short bias newsletter doesn't work for retail investors. They don't understand the concept of risk
Shorting's
before
hard.
reward.
Shorting
It's
is
not
hard.
shorting. It is not shorting.
No.
Yes. Let me explain this. Yeah, shorting is hard. And many people use options to short stock, to bet against stocks. But
Shorting with leverage is harder.
the retail environment retail investors do not understand the concept of risk before reward. But we know that most other people do. It's the first thing they look at, especially professionals. So what I decided was my thing was going to say, look, there are thousands of companies. If you own these, be careful because there's more potential risk with these than there are others. And now obviously that's a wink, wink to short sellers. Hey, you can short these stocks too, but I'm not selling this as a short bias newsletter.
To avoid.
These are stocks to avoid. That's what my list says. Stocks
These are
to
the
avoid.
ones that end up at the bottom of my screens that we just
They're
move
the
on.
ones. The ones at the bottom of your screens are the ones I'm interested in. It's almost like I could argue now that, well, we can get into it. Short squeezes actually can find the most dangerous stocks because they're being squeezed up on high short interest.
You're more caveat emptor.
there's so many ways of looking at the
Right.
market. So I decided I was going to come in, and my tagline is is respect the risk.
Risk
Respect
is
the
real,
risk.
you say, right?
Pardon?
Risk is real.
Risk is very real. And
Yeah.
that's something that people don't. I used to say risk is not a four-letter word. I mean, people don't want to talk about it in the retail environment. So what I did is I skewed it, and I view my end market of people who understand what I do, sophisticated investors and up. Some might trade, some are investors, some are short sellers, they're hedge fund managers, they're everyone in between. And my goal is to grow that. But what I found on Substack is that you can build it and they will not necessarily come if they don't know about it. And what I have found is that I'm surprised by the number of people who find me and say, well, Herb, I didn't know you were doing this. And I'm thinking, well, I've been doing this for a year and a half. Where you
Yeah.
been? Well, they don't know because they heard of. You got to remember when you're doing this. I operated in a world where there were a few of us. Now it's
Yes.
a world where there are many. Anybody can hang out a shingle. It's like anyone can be an influencer. So
I,
even if you're an old
I'm wearing
guard
that
type
T-shirt
guy,
myself, my friend.
even if you're an old guard guy like me, you have to come to terms with the same thing I did with social media in 2008, Twitter, when I said, no, these people who are on here are incredibly brilliant, many of them. You may not know who they are, but pay attention. Well, now I will tell you that there's plenty of great content out there. There's not, interestingly enough, for the very reason that I started doing um, short biased work at the newspaper, at the San Francisco Chronicle, I turned my column into something that really looked for what could go wrong, is because for the same reason, you look around and everybody, all they want to do is know what's going up. Tell me
What's
how
going
much
on?
money
What
I
should
can
I
make, how
buy? What should
fast.
I buy?
What should I buy? What should I buy? Well, to me, that's the, so what's the inefficiency in the market? What is the opportunity? The opportunity are the fewer people who are going to say this is where there might be problems. There are fewer and fewer people like that today. What I'm very good at is I'm very good at delivering that message in terms of I don't say a lot of good things about myself, but I will say I'm really good with the message in terms of the story and the concept and making it easy to read and grasp with humor and other things thrown in, because I have to
But the
enjoy
bottom
writing it,
line is pointing out where there's risk. The,
pointing out where there is risk and where you are likely to, if you own this stock, because remember the other lesson I learned from my short bias research firms,
Mhm.
our subscribers who are big funds would say, if you write about it, now I've got to stop everything. I've got to re-underwrite my position to make sure that I don't disagree with you, or that if I agree with you, if you pointed out something I don't know, I may have to change my position. And so the smartest investors, all they want to keep knowing is who's betting against me, who's on the other side of the trade. Just let me know, because I want to know if they're right or wrong, because every now and then they might be right. Many times they might be wrong. It's just part of the process. So
it's
if I
it's
go to my
like
grave, I go ahead.
it's like my favorite quote, Talmudic wisdom, I call it. Um, it's John Malone, the cable mogul,
Right?
talking about his experience with Moses Shapiro at Texas Instruments. He says, "Always ask the question, if not." And of course, he's got the old Jewish grandfather wagging the finger. Always ask the question, if not. Few people have plans for when their assumptions are wrong. That's Talmudic wisdom. I think that's what you're
And
doing.
that, well, it's what I think. If I joke that, if I go down and I end up my career doing this, it's the one thing I really believe in. Of everything I've done, it's who I am. You can't fake this. I mean, faking, when I in my career, I would argue that being a bearish guy, writing the bearish stuff, actually hurt me financially. And I can explain that because I couldn't own stocks, but I certainly could own mutual funds.
Right.
But when you're talking to as many negative people as I am or did, let me ask you this. What would it be like? Or let me tell you this. I can't tell you the number of times I was ready to commit money to my retirement account. When I say committed in terms of
Yeah.
equities.
Yeah. I'm
And
one of
one of my
these.
smartest friends would be, I have just interviewed somebody who has basically pointed out the reason this thing is about ready to unwind. And so what am I supposed to do? I'm going to tell my readers this thing's about ready, but I'm loading up on stocks over here. it was a constant conflict that I dealt
Sure.
with personally. And I do think that when you do this, and if you are true to who you are, it will shine through. I may be wrong. So when I'm making this transition, which I'm making now,
Yeah.
there will be more marketing with what I do. You have to sell it. There's no question about that. And there'll be
Mhm.
other, a few other products. But, I feel very
So
strongly about this, Jeff.
I can see that, and it's good to it's something missing in the in our business for people that point out things to avoid. I mean, I'm doing that right now with our call. You saw my opening salvo here about the recap, and we think the market's got some issues. But let's talk about some of the things that you're looking at. Get into some real situations. Um, you nailed this iRobot red flag, which is something that I saw out there. What did you see there? That's come down. Can you give us a little flavor for
Well,
why that was an issue?
well, I'll tell you, as they say, that's a long time ago, and that was earlier this year, I think. And I'd have to go back and brush up my memory. But at the time, the stock had already been crushed. And one thing we always like to point out is sometimes stocks that have been crushed can get crushed even further. Can't tell you
Short
the number of
sellers love
times
that.
people. Well, because sometimes once it's gone down, the longs will say, "Oh, the worst is over." I saw that with Newell, our short bias firm. We found some fantastic stuff on Newell, and everybody who was long it wanted to they said, "Oh, the valuation's already compressed." I'll never forget those words. And it got compressed a heck of a lot further because there was more to the story. So iRobot was literally a company that it couldn't get. It wanted to be acquired. It was supposed to be acquired. There's an antitrust suit. It didn't get acquired. They got tremendous competition from the likes of Shark Ninja and others. The business became incredibly competitive. Their balance sheet became as sloppy as they can be. I think they were loaded up with debt, and in the end, they couldn't hack it. Now they're still around, but they ended up really becoming a shell of what they once hoped to be. But that goes
Hell of a
back. I mean,
short.
that was a great idea, and that was, by the way, when I first put out iRobot, the stock was 1840, already down from God knows where. And when I
Like
looked in
$2 or something today.
it's $2. Yeah, it's around $2. So that's an 89% decline. And that was the whole thing. One I've spent a lot of time on just in the past few weeks.
Hmm.
I don't want to go entirely into it because I'm literally so excited about it. I'm spending
Yeah,
an
yeah.
enormous amount of time doing work on it. Is
What are you
MP
hot on right
Material?
now? Tell us.
There's a company called MP Materials. And
Right.
MP Materials used to be known as Motley Corp before it filed for bankruptcy. And then MP Materials is the outgrowth of that because the current
Motley
CEO,
Port.
Motley Corp.
Port.
Back in the
Motley
old
Corp.
days, it
Yeah,
was
yeah.
called Motley. They own a mine. They own a rare earths mine. It's a rare earth story. So right now, rare earths are in the news,
Oh, yeah.
and it is a um, they own a mine in California up in San Bernardino County, which is in the center of the state on the sort of the Nevada
It's
line.
just the
And
easiest state in the land to mine dirty rare earths out of.
yeah, well, let me tell you, that's part of the problem because of the regulations and everything else. But it's not just the problem. This is a story. What I've learned is I became a mini geologist slash physicist over the past 2 weeks and really trying to understand this, or a few weeks, I should say, because I had avoided this story forever. From the minute the company went public via SPAC, I literally avoided it because I knew people who said this is the best thing since sliced bread. I didn't have time, just didn't have time to want to dive into it. And what I can tell you is this became a good story, but the reality of what's under the story, it's got the headline algorithms love rare earths. It's so much more complicated than that. And I will tell you, my takeaway after doing the work on this
Hmm.
is if there's any industry that proves how fallacious the concept of protectionism is and how necessary geopolitical cooperation is, it is the rare earths industry. And what this company has as a growth story is tied to two very important so-called critical rare earths that China has since banned from being shipped here and of which they have very little. So the story of this is in the national
Who
interest.
has
We're
little
going
of
to
it?
make
MP?
MP. MP has tons of rare earth. it's the most plentiful rare earth anywhere. Their biggest customer is a company in China, which is their second largest shareholder. They have stopped shipping to that customer. So 80% of the revenues, 60% of the revenues is going away overnight unless all this stuff gets resolved. And you have a company that is a great story, but most investors, especially retail investors, I guarantee you, aren't going to look at that and aren't going to understand the nuances, because the nuances are so difficult and you really have to spend an enormous amount of time to know if you're being snowed or not. Now, the CEO, who's the founder, CEO, chairman, is brilliant in the sense that, he's a former hedge fund guy. Former hedge fund guy. He bought the mine for a song. He bought the mine in 2017 out of bankruptcy for $20.5 million. He has sold in the past 6 months 25% of his holdings, which equal about 125, well, on paper, about $125 million. So, and he got the stock for next to nothing. So that's a fantastic return for him. Mm-hmm. And so he's a big winner here. Now, I'm sure he believes in a lot of this, but I think without government subsidies, and even with government subsidies, they're not going to get what they need to make this story, to make the economics of mining the rare earths at this mine. Again, what the story, the promoters want you to say is, let's make rare earths great again.
Right.
They never were. This rare earths, by the way, they're not rare. They've been used for years and years and years in everything from televisions to cathode codes.
They're just filthy to mine, and you can't do it so easily in the States.
They are really filthy to mine.
The Rocky Mountains are filled with rare earths.
But again, it's not just the rare earths. It's what kind. And as we get into EVs and the magnets used, the magnets that are used in EVs, the magnets that are used in humanoid robots, those type of magnets require the ability to place a magnet, like we play with this kids that are used in toys, that they require specific minerals that absolutely, for a small component of them, so they can have higher heat and can be in very cramped spaces.
And what's the problem with the abundancy of those particular minerals for those magnets?
Well, first of all, Mountain Pass, MP's mine, Mountain Pass has very little of those, and they haven't really been processed. Processing them takes a lot, because there's very small amounts of it in their reserves. There are plenty of those, like Brazil has a lot, Myanmar has a lot, but I think the problem is getting them. And the fact is, the demand for those is going to be enormous. So processing those is going to become a big deal. So you have to look and say, and I would argue, I've had some calls with a variety of different people in the industry, and it was stunning to hear one guy say China doesn't even have enough for its needs. And so you end up with issues that but again, this is not, when I get into dysprosium and terbium, and I start talking DYTB, which were terms, and you get the periodic table of elements, out, and you look and you see that's the second to the bottom layer in there. You say to yourself, "Oh my! No one wants to hear this. No one cares. You've lost me. Eyes have glazed over."
Give it to me in 15 words or less.
What? These are just the two. These happen to be two very important elements that are that have processed versions of which are not in huge supply.
Right.
And this
MP doesn't have them.
MP, if they have them, it's a small amount, and they're trying to figure out ways to get it out of the earth and process them. But it's not enough to even meet their own needs, because the future of the company, the growth story surrounding the company, is its magnet subsidiary, its magnet segment, which has no revenues, has no profits, but is expected to start coming online because they have a contract with GM to provide magnets to GM's cars. So you can see that this is something that it's a good story, but you better go back and start thinking about what goes into this. And is there enough of it? Where is it going to come from? How long is it going to take? Who else has it? Who else has the magnets? Who else has access? Because there are other companies, magnet manufacturers, that have access. So this is going to be something to watch. I think the company is highly risky. The stock is priced like it's last time it looks like 20 times sales or something, and it's priced like
that's a red flag. That's a red flag for me from the get-go. All these types of spec companies that we looked at whether it was Vancouver mining stocks or biotechs back when I started with Yale, it was like a price to sales ratio had to be, single digits,
Mining is a tough business.
especially if
You and
there's
I
no
both know
revenue.
that.
Very tough. I've
No
been with you.
revenue, but there will be. There will
Wh-
be. They claim there will be. That's the story.
What's the
Remember,
ticker for people
stories.
to avoid here, or people the red flag?
And unless they do their own work and think that my analysis is wrong,
But
it's
what
MP. M as in Mary, P as in Paul.
2 letters? All
Two
right. So
letters.
what other you have any other thoughts on this tariff stuff?
Yeah, I think it's my issue is you can talk to people and make good cases about tariffs. I don't have a problem with that. I have a problem with pulling the rug out from under the world economy, like the way it was done, and creating such chaos. But I'm not the only guy to say that, and I'm not an
No,
expert in it.
no,
So I
no.
just think I want to think this too shall pass. But when it does, what kind of damage has there been? And will this be like everything else? We'll just forget about it that it even happened.
Or has some trust been lost?
That's the current narrative. Remember, these narratives
They change.
today are a dime a dozen. They come and they go. We can change the story changes the narrative.
Um, what about this AI business? What's going on there? Are you
What about
tracking
the AI?
that?
Well, yeah, I mean, I use AI. I mean, I've incorporated various levels of artificial intelligence, large language model AI into my work. It's improved
I mean,
my workflow.
the companies, the stocks. Is there anything there that's a red flag for you?
I mean, it's just valuations and people. There are different camps of people who believe that this has gone too far and that it will be like .coms. Again, I can't give you a chapter for verse because so many people have every argument out there. And when it comes to the suppliers to artificial intelligence, whether it's the chip companies or the companies that supply the chip companies or the relationships, or who's going to make money off of it. I mean, really, who's going to make money off of it, and how will they charge for it? And is ChatGPT going to end up being the kingpin? Is Grok through Elon Musk going to be that? I mean, who knows? You've got
Gemini at Google.
Gemini at Google, Perplexity, Claude by Anthropic. I mean, you go through, these are the top five or so. And it's changed
Well,
my entire approach to search for sure, but you still have to
yeah,
check everything out.
you do. A lot of it,
Oh yeah.
there's a lot of just
A
like
lot of a lot
non-facts.
of hallucinations, and if you run the same question multiple times, you might actually get the right answer once.
If you put a lot of good information in and ask very specific questions, it's helpful.
I think it's very
What about
helpful,
this
and I think that
Palantir situation? They're like
I don't pay attention. I do not pay attention to Palantir. I've never written on it. Plenty of people have. I don't. Not in my wheelhouse.
So what else is on what other red flags are on your radar? Anything you can
Oh
throw out?
my! I mean, the other red flags
Something
like
juicy.
yeah, juicy is Hims and Hers, HIMS. It's one of the top retail stocks. That stock does not deserve to be sitting where it does today. I was joking with a friend today. I said, "How's this stock up today?" When the news that's coming out from the legal issues, potential legal issues are enormous. I mean, this is a company that does online sales of erectile dysfunction, baldness drugs, and oh, by the way, they're also in the GLP-1 business, and that
Yeah.
GLP-1 business is through compounded GLP-1s. So now you have Lilly and Novo Nordisk really going hard over these compounders, and the FDA, I should mention, going hard over the compounders, because the compounders are basically taking a patented drug, saying we're going to personalize them by putting something else in, and this is going to be fine. And there's so many
That's a
significant
good one.
issues here, and so many lawsuits. But I will say one thing. I always say, if the investment thesis is tied to the short thesis, say, or the long thesis, it's tied to courts, Congress, or a regulatory body, good luck, because you never know how those things are going to shake out.
Hence the issue with biotechs and the FDA trials.
The FDA trials, phase three, baby.
Any other juicy ones?
Oh, I mean, I've got a list. I mean, I'm looking at my juicy ones right now. I mean, they're not necessarily, Oklo is a really interesting one. Oklo is a Sam Altman backed small nuclear reactor company. In fact, that whole nuclear space has a bunch of stocks that have really probably been on your screen, but you have to look at the reality of these things. So I look at an Oklo. Oklo is certainly, I put it on my red flag alerts list. I had one I really loved on my list, Yeti, which I had to take off because it has an activist, and I just think the activist may actually have some potential here.
Wait,
So
you
I took it
say
off my list.
Loved as a red flag or loved as a long?
as a red flag. Now,
Okay.
one I loved as a long,
Yeah.
which I have. I don't have many longs, but I do them every now and then. Is Netgear, and Netgear, which a lot of
Okay.
people forget. NTGR. Look at it today. We were doing this on
I
Friday.
think we have a Netgear piece of equipment over there.
Yeah, well, of course you do. Netgear is makes routers. The
Yeah.
stock was up quite big today because its key competitor in the router business is a Chinese company called TP-Link. TP-Link owns most of the space. They own 60%, like a 60% share. Netgear has less than a 40% share. But the reality is now the U.S. government is going after TP-Link for possible criminal activities, and also the question is security. Basically, do they have security issues? As it relates to the U.S. Are they wrongfully doing business in the U.S.? So Netgear is a company I always like to joke everybody knows about, but everybody's forgotten about as a stock. But the company's going through a turnaround. They have new management. It's actually very interesting from a fundamental perspective. And the way I put it when I wrote it was that it has a catalyst that is backstopped by fundamentals. So you have an interesting
I like it.
situation that people aren't paying attention to. And you can see the way the stock will move on news like today when I think it was up. I haven't looked, but it was up like 8%, 10%. NTGR. So
Yeah.
it was
So
a
NTGR is your bull.
yeah, that was my bull. And then but most of my things are, I mean, I've had bulls throughout. I always like to throw in a good long story from now, but I'm looking at my list and my list is so played out. I mean, the solar companies, Enphase, Solar Edge remain good ideas. They're on my list. There's a company called Savers Value Village. I mean, I'm looking at some that are on my focus list. Signet, I took Signet off, I think.
Chart looks pretty
And
good on
some
Netgear.
Netgear is very interesting. Netgear has one I would argue you need to watch because it is clearly, if it moves more, it will move not because your charts say they're going to move. It's going to move because they actually have the potential to win business, and suddenly
Well, the chart
the
is telling you
60.
that they have potential fundamentally.
Well, that's today because that gets into the whole thing on
Not just
charts,
today. No,
right? I mean,
there's a bit of a nice bottom there. You know, a nice
yeah.
top.
So look, I think there's a lot. I'm working on some new names. I'm working on some things. I'm constantly working and looking for new names as I go forward, and that that's a little more challenging because I have names of companies like a Restoration Hardware, which I might watch and put on my radar, but
Just
then there are
RH now,
others.
right?
RH, yeah, that's right. The old timers and us. I mean, want to call Restoration Hardware, but
I had to ask the question, what's RH? You know?
RH is Restoration Hardware. That's right. There was Restoration Hardware. Fascinating story. CEOs colorful as all get out. Fun to listen to. Fun to watch. So you're looking at things. I'm looking at a few. I'll tell you. I see one. I'm not going to get into the names. There's another rare earth company that I'm paying attention to that I want to
Okay.
get my teeth into. And then I saw that there is a small nuclear reactor company coming public via SPAC. And I got to tell you, I can't wait because that I look at that, I'm saying, why is it coming public by a SPAC right now? That's not right, and it's trying to play into the nuclear trend, which isn't really going much of anywhere right now. But I have some other ditties if I write about it that I'll put in there because it's for some reason it's a space that I suddenly have taken an interest in and I've
So
been watching for a while.
I'm gonna have to sign up, but how do people get the next picks, the next red flags, or the next longs?
If they go to herbgreenberg.com. I don't have a publishing schedule. I publish when I feel like I have something to write. I tend to write more frequently than I probably should.
Looks like it's
But
about
I don't.
weekly, right?
At least, what I tell people is I will be writing at least weekly,
Right.
46 times a year, because I need to. Life gets in the way, family gets in the way. But I tend to write multiple times a week, and I would just like to give myself some wiggle room for when, you know, I always am working on something, and half the time I never finish them because it's just not worth it. Am I going to really be more noise in someone's email box? So I try to make it worth people's while. And I'm currently on Substack as we're recording this. I'm morphing
Right.
off of Substack to a different platform. I'll have my own website and there'll
Nice.
be more marketing. And then we're going to have another product that is very exciting if it all goes the way we expect with somebody else I'll be working with. I haven't gotten into details on that, so that's kind of exciting. And
Cool.
I'm just trying to have some fun and add value in the process.
So what else you do for real fun though?
I know this is the problem.
I mean, you got to stay fit doing something. You must. I
go to the gym a few times a week. I walk most days, try to walk up to 4 miles a day.
There's got to be a beach nearby you now.
Place. I don't do the beach thing. Yeah, there's a beach 4 miles due west of me is the Del Mar Beach. And I see the water. I love seeing the water. I just love seeing the water as often as I can. So, but I'm surrounded by golf courses, some of the world's best.
You don't play
I don't play golf. I don't play golf. I'm surrounded by a lot of tennis courts. I don't play tennis. I don't play pickleball. I basically spend my days working, and the work is my hobby. And I go through this with a lot of people. I'm not retired. I'm old enough to be retired. I will never retire.
You look great,
and here's why. Well, thank you. But here's why. When you're a creative person, people say, "Oh, I'm constantly getting retire. When are you going to retire?" What would I do? And so, but when you're creative and you always are coming up with things in your head, you don't just say, well, I'm 65 years old. I'm going to turn that off like a switch. Well, I'm almost 73. So if you told me, other than my grandkids, they live up in the Bay Area. We're taking them to Disneyland next week.
There's some fun.
A week at Disneyland. Well, there's some fun. You ever check the prices out at the Disneyland resort? It's not what it was 30 years ago.
I just meant doing things with the grandkids as fun.
The grandkids are always, they're two boys and they're always, let's just say, spirited. So it always keeps us on our toes. And we travel. My wife and I love to travel. My wife has a travel blog, so we spend a lot of time traveling.
We're going out to Yellowstone this summer. Me and the wife are going to be doing some hiking. I've been there a bunch of times. It's a magical place.
Of all places I've never been to Yellowstone, but most of our travel's outside of this country. So
yeah, I'm a wildlife guy too. So I love the outdoors. I do a lot of hiking, and I just, she's been wanting to go to the national parks, and this is just the year. We got our two boys are going off to college. One of them's already there. The other one's going off this fall. So we're going to be busy.
You're going to be really busy.
Well, listen, man, it's been great having you on. I'm glad we got to catch up. Thanks so much. Thanks everybody for joining us. Again, I'm Jeffrey Hirsch for Wealthwise on Biz Talk Today TV. Available wherever you get your podcasts. If you want to find out more about the Stock Traders Almanac, go to stocktradersalmanac.com. You can also find out about my newsletter. Check me out on social at Almanac Trader on LinkedIn. Just do a Google search for me or the Almanac. Again, thanks to Herb, and thanks everybody for joining us. Happy Friday. See you next week.